front fairly stable. Let's connect then with Santanu Chakrabarti, who joins in from Edelweiss Financial, who joins in to give us a better flavor on the quarterly numbers. Santanu, hi there, good morning. The asset quality this time around has been strong for HDFC Bank, but there has been some impact on account of the COVID collections. And how have you looked at the numbers?
Look, I mean, if I look at it on a pro forma basis, what the numbers were last quarter, or in terms of slippages in the actual terms in the current quarter, in both terms, the asset quality has not worsened much. But as you also kind of alluded to, the bank has been clear that the collection run rate in the 15 days of April, which they have already seen, has started to weaken a little bit versus the month-on-month improvements they have been seeing up until March. So that factor remains that there has been a marginal worsening of trends, if not headline asset quality. The other part from where the marginal negative surprise came is that the provisioning that they made on their pro forma NPLs was also accompanied with further floating provisions being made. Now, as we recall, throughout this period of COVID, or even the quarter preceding that, which is the corresponding quarter last year, HDFC Bank was one of the banks which was perhaps the only bank which didn't go in for excess amounts of provisioning and delivered asset quality to back up that choice, obviously. So, on an optical basis, that creates marginal pressure on the numbers, but it's not something that we are too worried about. Of course, the April trend will be watched closely for a full sector read-through as far as COVID is concerned in its second wave.
Okay, fair enough. And banks and brokerages rather across the board have described the company, the bank, as COVID-proof this time around, with 100 basis point credit cost in a COVID year. Are you impressed on that parameter? And I would also like to get in your view on the stock price.
Right. So, first of all, very impressive. And what's impressive is they seem to have called it early. When a lot of other banks were prominent banks, and we don't knock it because that sets up FY22 with a strong earnings growth year for some of those banks, made large quantum of provisioning. HDFC Bank didn't, because it was very clear on the calls at that time that it didn't need to, and that's played through. So obviously impressive as far as asset quality is concerned, especially when I pair that with credit growth performance. Clearly has stood out as the sector benchmark. So absolutely agreed on that. Now, as far as the stock is concerned, I felt that the management made it quite clear that they see light at the end of the tech tunnel, and they feel that RBI audit is almost done, and business as usual on digital customer acquisition is going to begin. But remember, they still got 2 million liability customers onboarded new in this quarter. And therefore, because the liability cross-sell is such a large part of the new customer acquisition strategy within unsecured, it just tells me that worries around market share loss because of the disruption that they have had it is probably overbuilt up. And if you heard the call, earnings call on Saturday, you'd have heard that a lot of the questions centered around when and how this can start back up. I think I have a key question which is also still somewhat open. I mean, they have indicated that they're investing heavily into tech and other data AI/ML capabilities, etc., to up their technology game. We await a little more granular details on that for a long-term prognosis of how effective this tech change is going to be. Nevertheless, given the current combination of valuations, confidence on the balance sheet, and the fact that growth will pick up on the retail side as this green flag comes from RBI, If this remains our number 2 pick within the sector, our top pick is as well as a combination of various factors. And our target price is 1,730. So we are fairly bullish, and it remains one of the safer plays within the uncertain times of this second wave COVID.
Okay, so safe play within these uncertain times. 1428, by the way, is where HDFC Bank wrapped up on Friday's trading session. Thanks so much, Santanu, for joining in and giving us that heads up. Well, let's get you some quick news wraps as well, and some of the top headlines in the country amid the